Okay, recording this video on Saturday, the 22nd of January 2022. It's just gone 10:36 p.m. Chicago time. Do hope you are doing well. So, this video we're going to talk about the indices because we've just had a pretty dramatic sell-off in the last 2 days. I do hope if you're a subscriber to the channel that you caught Wednesday's video called the Killing Fields pattern, because that is what led up to this particular break. We've broken supports on the daily charts on the lowest and intermediate time frames, and that means we're in a trending move. And what I want to talk about in this video is where this is going to go. But just a quick recap. This is the daily chart of the Emini day and night session here, and this is the Killing Fields, where the professionals use their power to jack up the market to new highs. We actually had Rambo patterns up at 4,800 here, and they're using all of this activity to get out of their positions. And we know they're getting out because we've broken through the lows of those blue professional bars, and that's what's triggered this nice little triple signal here. So a triple signal happens when we have the three non-correlated indicators go off together. First of all, better momentum shows us volume momentum, where we have an exhaustion and bearish divergence pattern. So we've run out of puff on the upside. Number two, we're overbought on Better Sine Wave, which is the background here showing that we're overbought. We've been overbought for a long time on this market, but finally when we get a break of the blue professional bars, that is the third signal there for a short signal and weakness, and there's the triple kind of come in on Thursday's activity. So that is the E-mini kind of day and night session, and it looks a little bit different on each of the major indices. And I'm going to show you the futures markets for the Russell, the NASDAQ, the Dow and the S&P, because what we're looking for is patterns that will sync up together, but it's basically the next level of support. And because we have broken into a trending move, we need to end the move with an end of trend signal. So let me show you this on the upside, for example, here. This is the Russell. Last time we had, back in October 2020, we had a double break here where we broke above resistance on the intermediate time frame there. So that line is a little bit thicker than the lowest time frame. The highest time frame here is shown with the thickest bars, but we had a break of the low and intermediate time frame. So this market needed to run to end of trend on both the lowest and the intermediate time frame. It ran to the end of trend on the lowest time frame here, and then it ran to end of trend on the intermediate time frame. Again, note the thickness of the lines. That's low, that's intermediate. We then put in a second cyclical turn after end of trend, which is getting rid of all of that, first of all, trendy activity and then cyclical activity, and then we're starting to set up for weakness. We had a false move above 2,400, and then we broke into a downtrend. Now, because we've had these two breaks here, what we need to see is a mirror image on the other side. So we need to see, first of all, a pullback to end of trend on the lowest time frame, and then a pullback to end of trend on the intermediate time frame. Now, in a lot of these markets, yep, we've been creeping higher and higher every day, and seemingly the points change every day has been pretty good. But we're in a trending move now, whereas, you know, the last year we've spent, the Russell has been in a trading range. This is a cyclical pattern going on. So we're just batting backwards and forwards, kind of non-directionally. But we're now going to move into a trending phase, which means the market will move, you know, quickly and decisively in a particular direction. So here's the supports on the low and intermediate time frame. And the first place down we're going to reach is we're going to go into a pullback to end of trend move on the lowest time frame. And typically, because we have syncing of moves, trending moves in lower time frames sync up with cyclical moves in higher time frames. We will see at the same time these two lines cross. We'll have the highest time frame fast and slow lines on Better Sine Wave come together when we put in that pullback to end of trend. So typically where that happens is somewhere between where we are today and the resistance level that we punch through on the highest time frame, and that will actually be a pullback support on the highest time frame, because we're above support, we're above resistance on the highest time frame. Therefore the support level typically will come in there. So it's somewhere between where we are today and kind of down here. But The hardest thing is going to be holding and holding and holding for this move on the way down. I'm not sure we'll make pullback to end of trend on the intermediate time frame in this sequence, in this kind of move down, but we need to put in pullback. A support level on the highest time frame syncing up with a pullback to end of trend on the lowest time frame. So that's what I'm going to be looking for. Each of the indices are slightly different, but we do have on the Russell and the NASDAQ a similar type of pattern. Here you can see we've broken through support on the low and intermediate time frames. We're in a strong trending move down. This is going to come down, and when the highest time frame comes together, the fast and the slow lines start to meet, and we have a pullback to end of trend on the lowest time frame. That is where these things will start to find support. And again, typically, I mean, I don't think this is particularly helpful to say, but it's between where we are today at 14,000 and down here at 7,000. So that's a huge drop, but somewhere between here and down here, we will find that kind of support level. Now, the Dow and the S&P making slightly different patterns. Here, what we have is we had our pullback to end of trend on the lowest time frames. We had a couple of them come across here. We then went for our pullback to end of trend on the intermediate time frame, slightly thicker lines. We then went for a second cyclical turn, support to resistance, second cyclical turn after end of trend. That's all. The trending activity is finished. We've also gone through a little bit of cyclical activity where we can't decide what to do, and then we broke into the next phase, which was into a downtrend here, breaking support. Now on this move, the first place that we will find some support is support on the intermediate time frame. So on the Dow, we're looking for the intermediate lines. These are the less thick lines, not the super narrow ones, not the super wide ones, kind of the intermediate ones here. We need these to come together. So the fast line is heading down. It's about 10 at the moment. It's got to go to minus 100. And then the slow line is going to join behind. And when they loop together, that is an area that we're going to find support on the Dow. So again, where that happens, don't know, but that will be I'll be looking for those types of patterns to sync up together on each of these indices. I don't think any one is particularly superior. You get a little bit more information by looking at 4 indices together, and I actually happen to look at the ETF, the futures, and the index themselves, because you get little kind of tells in each of those that what might be going on kind of in the background. But anyway, so now we're looking for support on the intermediate time frame on the Dow, and the S&P 500 is showing a similar pattern. Although this image just shows the strength of the S&P, we've actually not broken into a downtrend technically. You can see all the bars are red here, whereas the other ones we have, the Russell, the bars are white. The NASDAQ, the bars are white. We've got the Dow, the bars are white. But we're not broken into technically a downtrend here because we never put in the pullback to end of trend on the intermediate time frame. So we had pullback to end of trend and pullback to end of trend on the lowest time frame. We still haven't put in the pullback to end of trend on the E-mini. So what needs to happen is those slightly thicker lines here need to loop down probably towards the minus 100 level, come together, and that will be our support level there. So just some back of the envelope type calculations. If we were to put in a 20% decline on the 4800 level, that takes us to 3840, so just above here. I don't know. That looks like a little bit of a stretch to me, given that we're going to find support on this intermediate time frame. But let's wait and see. We've been, I don't know what the right word is, lucky to be in such a strong trending move for so long. Maybe we could surprise on the downside and people just be just horrified by the strength of the move on the downside. It does seem to be coming together with some good and bad news, whereas we're kind of loosening up on all the COVID restrictions. I'm sure everybody's kind of aware that the UK, Ireland, Spain has kind of started to really unwind their COVID restrictions. WHO is making positive sounds and so on. So on the COVID side of things, things are looking a lot better than they have done in the last year and a half. But on the relationship with Russia in particular, things are looking extremely kind of worrisome. So who knows if that kind of news out of that part of the world is going to drive equity markets down. But that's what I'm looking for on these charts. just as an FYI, we're looking at the 45 kind of tip bar chart, the kind of pattern that will stop this initially, this first kind of move down, will come in when we get a similar sequence to this. Remember, it's the three patterns that come together. We had a whole bunch of exhaustion patterns and bullish divergence, a couple of bullish divergence coming. So volume momentum was, done on the downside. We had our oversold levels on Better Sine Wave for the background printed red, and we saw blue professional bars kind of spike down and come in at those lows. We broke above the highs of those blue professional bars. With the last 2 days activity, what we've had, I think this is all of just yesterday's activity, blue professional bars have started to come in, but I don't know, I can't call that, a bottom of this move because we don't have exhaustion sell. This could just be halfway. We'll often see blue professional bars halfway through a move. They were kind of, we know this is the killing fields pattern. We know they were selling down here. It kept on going. What is that? 4,800 to 4,400. So we're 400 points off there. Could we go to 4,000? On the E-mini if these blue professional bars kind of signal a midway point to this top to bottom type move. So 4,800 to 44 to 4,000 on the E-mini, so which would take us to this kind of level down here. That's interesting. Let's see, but this needs to catch somewhere in this zone. The Russell will catch somewhere in this zone initially, and then we'll have a final move on our highest time frame, pullback to end of trend, and put in the pullback to end of trend on the intermediate time frame on the E-mini chart. So for me, the hardest thing is to hold, because I just like taking profits, and it's holding through that volatility as the market kind of moves down. When you see all of this volatility that you have to sit through in order to find the bottom that's kind of plumb down there, I find that really hard to do. But this is an important trade, and you only need one important trade a year to kind of make your bank. So I think we've had our break over kind of Christmas and New Year's. It's going to get wild and hairy from now on. So be prepared, and I'm quite looking forward to it.